Hello, and welcome to the first market update of 2025. My name is Daniel Manser, and as always, I'm joined by Dr. Vivian Xu of Frontier's Capital Markets and Asset Allocation team. Hi, Vivian.
Hi, Dan.
Well, Vivian, it's been a action-packed start to 2025.
It certainly is.
But let's start with everyone's favorite topic, inflation. What key trends have you seen so far this year?
Sure. The inflation across most major advanced economies have continued to moderate, although the core inflation remains stickily higher above the target in many countries, including the US and Australia. So when we look at the breakdown of inflation, we've seen during the holiday season, the headline inflation data in the US has picked up, and this was mainly driven by the energy inflation. And the energy is shown in this chart in light blue. It takes the biggest part in the latest data print. And looking separately, we also see that the housing inflation, which has historically been a key driver of the headline inflation, is continuing to trending downwards, but it is still a major part of the headline inflation. So overall, the higher inflation has triggered readjustment of market expectation around the rate cutting cycle from the Fed, and that expectation has been moderating following this higher print of inflation.
Fantastic. Sticking with the US, we've also seen a familiar face return to the White House this month, and he's had a busy first 10 days in office. How exactly has the market reacted to his various policy changes and the introduction of potential tariffs?
Sure. It is difficult to give a definitive conclusion on what's the total impact going to be for Trump's policy, because there are so many different potential routes he can take. Generally, there are three pillars that supports the Trump office economic agenda so far. One is the new tariffs, of course. The tax cut is expected to provide some support in terms of growth for domestic U.S. corporations by lowering tax rates and, at the same time, rolling back some of the existing regulations in place to help the growth.
Shifting our focus to the world's second largest economy, China, as they kick off the Lunar New Year celebrations today, how is their economy shaping up?
At headline level, Chinese growth in 2024 has hit the 5% target set at the start of the year, and that growth is mainly driven by the industrial production and export growth. Interestingly, export of China has been increasing significantly in the past several months, and this was mainly due to the expectation around Trump is coming into the office and the trade policy is expected to be tightened. So there was a lot of front loading going on both on the Chinese side and on the US side. And so we've seen the exports picking up quite dramatically for China.
Fascinating. Thanks so much. We've also seen a real buzz around Chinese AI firm DeepSeek in the last week or so, and it's really introduced volatility into markets. Could you just quickly explain to us what exactly has happened there?
Absolutely. That's what everyone's been talking about these days. What happens was that one of the Chinese AI companies released a new chatbot AI model, which performs similarly and even outperforms in some aspects to the existing models. What is so huge about this model is that the developers claim they only used a fraction of the cost, 1/30 of the cost of what the U.S. companies initially invested in developing their models. And if this is real, it can be a huge leap forward for the entire AI industry, because what used to require hundreds of millions of investment to set up the infrastructure for AI development now requires only a small fraction of that. And it practically means the threshold has been lowered to a point where a lot more companies and smaller players can get into the game. the US tech stocks have taken the hit particularly hard, with NVIDIA in one day lost close to 17%, which is the biggest single day loss for any company to date. And going forward, the market's opinion so far has been divided on what's going to happen next. Some of the investors believe that the sell-off is a bit overdone, and now with the price level lowered, it has now opens up a nice opportunity to buy in the dip for these tech giants companies. And the counter argument to that, of course, is that this is only the starting point of the revaluation of the entire tech sector, and we'll continue to see more rewinding of the overbought position for this tech giants. It will surely be more volatility and more exciting times ahead.
Fantastic. Some really valuable insights as always there, Vivian. Thank you so much.
Thank you, Daniel.
Thank you for watching this month's Market Update.